In this video, I'm going to teach you my personal crypto model for absolutely free. Now, ICT concepts do work on crypto, but not all of them. So for example, you cannot use the Asian Judas swing with crypto or the New York Open Judas swing. Only a few concepts work with crypto, according to my back testing and forward testing, of course. And I'm going to teach you the best crypto model that you can use. All right, this is literally the best way to trade crypto if you are an ICT student or actually any type of trader. This works really well, and this could be your bread and butter model. All I ask in return is a subscribe, because we are really close to 100k subscribers. All right, so at least I deserve a subscribe because I'm giving away this information for absolutely free, and a lot of people are going to charge you with thousands of dollars for the information I'm about to teach you right now. So for crypto, we are only going to be trading above the 15-minute time frame. All right, so I'm at the 15-minute time frame, so above the 15-minute. All right, if you go below that, you're gonna just blow up your accounts. You're gonna lose everything that you have. So the model that I'm going to teach you is called range trading. All right, now this is the best way to trade crypto, and it may seem a little dumb when you have no idea about this model, right? If you have no idea about this model, it may seem dumb to you, but when you're going to back test and forward test this, you're going to come back and thank me. All right, so essentially what we are looking for is a push to the upside or a push to the downside. So for example, we get a push to the upside, right? We have a big push to the upside, and then we see a significant low created and a significant high created. So after a push, we have this high over here. So we're going to mark this high out. Now that becomes our range high. Now, once price pushes below, we have a pullback, right? We want to see a significant low created. So we had a low here, but you can see it was violated right away. So it is not a significant low. We created another low here, and that was violated once again. So that isn't a significant low as well. But over here, what you can see, we created another low, and then we have a big push to the upside. Now this becomes a significant low because this low holds power, right? Price didn't violate this low. Once this low was formed, price pushed up, and then it had, a consolidation or, a sign that it wants to go up and create a range low, right? So what you can see is price doing this type of stuff around your range low. So now this becomes your range low, right? Why? Because it wasn't violated straight away, and it had a bigger pullback than the average price action around here. I hope that makes sense, right? So we have a significant high and then a significant low formed. So now we have a range high and then we have a range low. Now there's a thing called deviation in the crypto world. It's same like liquidity sweep, right? But there are some different things that you have to, keep in mind for considering this as deviation or liquidity sweep. So let's assume, so now what we are waiting for is price to either sweep the range high or the range low, right? So let's assume that price goes up ahead and it sweeps out the range high. Now, there are 3 steps to take our trade. Now, once the range high is taken, the first step is an acceptance back into the range. So after a deviation or liquidity sweep, the first step is for price to, close back, and I mean close back into the range after liquidity was swept. Afterwards, the step 2 is market structure shift. All right. And make sure for you to consider a market structure shift, this low caused deviation, right? So after this tiny low was formed, price went up ahead and swept the range high. So in order for me to consider a market structure shift, I want to see this low broken. All right. Once the price closes below here, we want to mark out our fair value gap, right? Could be here. You can also take your entry from the breaker block, or also you can take your entry from the order block. All right. So in this instance, you have a fair value gap. Now, the next step is you want to mark out the range high like that, the range high and range low with your Fibonacci. And you have to mark out the 0.5 level of the range. All right. So now you want to be taking your entry and you're going to be targeting the opposite side liquidity. Now, once price reaches the 0.5 level, you are going break even. All right. This level is very important. When price reaches this level, you are going break even with a small partial if you like, but I suggest you just go break even here. And then what you're doing is simply targeting the range low over here. This is literally all you need to trade crypto, guys. I am not even kidding. This strategy is insanely powerful and it is very, very profitable, right? So similarly, if I flip the chart over, after a dump, right? So let's assume that we are in a downtrend and then we see a dump. We see a low formation. So that is our range low. And afterwards, price creates a significant high over here, right? We have a high formation. Then we have, consolidation around this area. Price pulls back, goes below significantly. And that gives this high a high value. Why? Because this high held the price down for quite some time, right? So now, after price takes out the range low in this example, we are looking for a market structure shift. We are waiting for price to come back into the range, right? You cannot get a market structure shift, let's say around here, and then take your entry. No, we have to see price come back into the range for it to be a valid range trade. So now we are simply taking our entry and we are going to target these highs over here. Now, according to my testing, I highly suggest you skip Sundays and Mondays. All right. If you can, also skip Saturday, but Sunday and Monday, just avoid those days. All right. So that's pretty much the entire model. I'm going to give you guys some examples and then I will end the video. All right, everyone. So here is example one, looking at Sol USDT on the 15-minute chart. And you can see that we had a big push up, right? And previously we had, a range high, a range low. And after deviation, you can see we took out this high and then we took out this high. So this range was finished. This range played out. Then we have another range. So we have a range high. And then we have a significant low. So you can see price, we had a low here, but it wasn't significant. It was taken out. Then we have a tiny low here. It was taken out. But then once this low formed, we had a big push to the upside, a relatively bigger, push than these lows, right? So we had a significant range low and a significant range high. Afterwards, what do we have here? We took out the liquidity, or you can say deviation. We had deviation here. Now this low caused deviation. So that's what I'm going to consider for a market structure shift. Now we have a fair value gap, right? And we also have this huge order block right here. So my entry would have been from this fair value gap. My stop would go right above these highs and I would go for this low as my target. So this is literally all you need, guys. I promise you, this is literally the best crypto model that you can use. Let me give you guys some more examples. All right, so here is example number 2. So you can see that we had a big push to the upside and then we created this significant high over here. And afterwards, we had a push to the downside, right? We had this low, but it wasn't significant. But then afterwards, we created this low and then we had a push to the upside, giving value to this low that, okay, there are stop losses below this low. Price has been going up from this level. So we have range high and then we have range low. All right. So when a price pushes up, we mark out the significant high, right? So over here, you have a significant high, and this high caused the pullback that formed this low. So that's why I'm marking out this high. And afterwards, you can see that once we had the range formation, we had deviation. So price took out deviation. I'm looking at 4-hour time frame. That's BTC. And then this low caused deviation. So in order for me to consider this a market structure shift, I want to consider this low. And afterwards, you can see that this candle swept liquidity. So this is my auto block, right? And just around here, this would be my entry. My stop would go right above the high, and I could have targeted this level, giving me 2.9 risk to reward ratio. Literally all you need. And if you are my old subscriber, you might have noticed that this is quite similar to ABC strategy, but we are using, a lot of other stuff as well to make this a high probability model. Let me give you guys one more example. All right, so this is a very clean example. So I'm looking at ADA USDT on the 4-hour time frame. We had a push up, right? And then we created a significant high after we got this significant pullback. So that is a significant high. And afterwards, you can clearly see that this low held and afterwards price went up. So this is our significant low. After deviation, so we took out the high over here. We were looking for the, this low to be broken because this low caused deviation. And you can clearly see we had this fair value gap just around here. And this would have been your short entry. Your stop would go above the high. And you can clearly see that after price swept the liquidity, right, we had a push up. So very easy model, guys. I really hope you guys go and back test and forward test this and then come back and tag me, because this actually works all right. So it's just, it's your bread and butter model. All I ask in return, just subscribe. All right. I'll see you guys next Sunday. Goodbye.